All right, so let's get into it. Talking about credit scores. So 300 to 850, that's about the range that your credit score usually can fall somewhere in between that mark. And obviously for qualifying for a home loan, you want to be closer to the uh 850 range. If you can be 700, 600 is even better. But FHA, as you may know, has put out within the past year, less than a year actually, that they're going down as low as 500 for a credit score. I do not know a lender that has been able to approve a home buyer with a 500 credit score. It is that difficult, even though FHA claims that it is possible. The lowest I've heard of a lender being able to approve a home buyer for is 575. Usually there is a 10%, not usually, there is a 10% down payment requirement when you go down as low as 500 and or when you go below 580, really. So anywhere from 500 to 575. 579, there is a 10% down payment requirement that usually becomes a barrier, but there are also other areas that need to be good with the credit. So we like to get above 580, but we'll dig a little bit into what we can do to help the credit score, some things that hurt the credit score, and how to repair it as well. So we talked a little bit about the scores here, so you can just see it in a visual form. What is, great credit score, good credit score, the best credit score to have. Again, the closer you get to the red, the harder it is going to be to qualify. Not impossible, um, but it is definitely difficult. Even if you're at a 580 or a 590, it's still a little bit more difficult. Sometimes you'll have to show reserves and everything like that in order to qualify. So this is what makes up your credit score. Let me see if I can minimize that just a bit. So this is what makes up your credit score. Your credit score is made up by the biggest portion is your payment history. This is your ability to be able to pay bills on time. And so just by you simply making payments on time, that is doing the best for your credit score. And you're going to hear me say that a few times throughout the presentation because it is the most important thing that I want to make sure I hammer home so that people understand pay your bills on time. That's the best thing you can do to help your credit score out. So the next thing down on that list is the amounts owed, and this is how much debt you have total. So if you notice, the payment history and the amount owed total 65% of your credit score, and that's just with those two items. How much debt you have and how well you pay on that debt every single month. That's the biggest portion of your credit score. And as I'll get into a little bit later, missed payments are something that can hurt you tremendously on your credit score. And I have a story that I'll tell about that a little bit later as well. On down from there, the length of credit history, the longer that you have credit, the better that your credit tends to be. So generally, people that have higher credit scores tend to be, I don't want to say older people, but people that have had a longer credit history, which tend to be people that have been around a little bit longer. So um, after that, we have new credit and credit mix that are currently, sitting at about 10% of what makes up your credit score. So new credit being when you open up a new credit card or you get a brand new car loan, you don't have a lot of history with that new credit. And so because of that, your credit score suffers a little bit until enough history is built up so that the credit bureaus can see how well you pay on that debt. And credit mix is the variety of credit that you have. Do you have just a credit card and that's it, just a whole bunch of credit cards? Or do you have a credit card and a car payment? Or do you have a mortgage? Or do you have an installment loan? What's the variety? Do you have student loans that you're paying on? That's the variety of credit. I know a lot of people have student loans right now, but they're not paying on them. And so with them sitting in deferment, it's not doing a whole lot to help your credit, even though it might not be actively hurting it. It's not doing a whole lot to help it right now, unless payments are actually being made and there's a payment history that can be seen. So moving on from there, there are two types of credit that you have, revolving and installment credit. Revolving credit is your credit cards and your HELOCs. The difference between revolving and installment, revolving is credit that when you spend it, you can pay it off and spend it up again, like a credit card. You can spend your money on your credit card, you can pay it down, but then you can charge it back up again. Same thing with a home equity line of credit or a HELOC. Installment credit is credit where when you pay it, it's done. You can't charge it back up anymore. For example, if you have a car loan, once you pay that car loan down, you can't charge that car back up anymore. unless you have a Tesla. Okay, so I'm full of dad jokes. You're not going to get any more from me tonight, but I had to get one in because I'm full of them. But anyways, but you can't, put more money back on that car loan. Student loans, same thing, mortgage and personal loans. Once you pay those off, they are paid off. And so those are the two types of credits that you have. We'll dig a little bit more into that. So how do you build good credit? Pay all of your bills on time. This is not the first time you've heard it. This is not going to be the last time you hear it in this presentation. It is the most important part of your credit, is to make sure that you pay all of these bills on time. So after that, you want to keep your credit balance below 30% of the credit limit. So for example, let's say you have a credit card and that credit card limit is $1,000. You want to keep the balance on that credit card at $300 or less, which is 30% or less of your credit limit. And that's how you help your credit score. And then after that is a credit mix of at least two different types of credit. So if you have a bunch of credit cards, you can build credit with just a credit card, but you're not going to build credit up into the 700s and 800s with just a single credit card. Generally, you need to have a mix of credit in order to get that credit score up to, the 800 range. And so having that mix is something else to help you build good credit. We'll dive a little bit more into that as well, because there are a little bit of things that you want to be aware of when you're formulating that mix, especially between revolving and installment credit as well. So I put on here as an asterisk self-reporting non-traditional credit items. So you do have the ability to self-report items that what we call in the mortgage industry non-traditional credit items. These are items that are not typically reported on your credit report. These are things such as your cell phone, your internet, your utilities. You can report these things to the credit bureau and they can help your credit score. Personally, I think it's not a bad idea to self-report those things because you're paying them on time every month anyways, assuming you're paying them on time every month. So why not go ahead and have your credit benefit from paying those every month? Now, with that, you can't directly report to the credit bureaus the payment history for these non-traditional credit items. What has to happen is you have to connect with a company that provides a service to where you, and I'm not going to name any of the companies because it's a bunch of companies out there, but you connect with a company that provides a service to which you would provide that company with a copy of your payment history for your cell phone bill. They look at that and they report that to the credit bureaus. You provide them with your utilities and your internet, whatever it is you're wanting to self-report, you provide that to that company, and that company then reports on your behalf to the credit bureaus. And oftentimes they do charge a fee for that, which is another reason why I listed it as an asterisk, is because there is typically a payment monthly or yearly for this service, depending upon the plan that you sign up for. I've seen them at $10 a month to pay for this self-reporting service. I've seen it at $25 a year for this service, and depending upon what they offer. So that might be something that you want to look into if you're looking to build credit and you don't have a mix of different types of credit. For example, let's say you just have one credit card, but you don't have a car payment, no student loans or anything. Then you might want to look at self-reporting, and that might be an option to help you still build that credit and have a mixture of some different types of credit in there that are reporting on your credit report. So moving on, what hurts your credit report? Missed payments and late payments. And you hear it again and again, you're going to hear it. Pay all the bills on time. So missed payments, late payments will hurt you the worst on your credit. Under that, maxed out credit cards. Charges above your credit limit. Charges above your credit limit are going to ding you twice because you're already maxed out, which is one hit that you have against your credit, but then also you're charged above the limit. So you had that credit card with $1,000 limit and you charged it up to $1,100. Now that's a second hit that you're getting for being maxed out and going above your limit. So you definitely don't want to have charges that are above your credit limit. Bankruptcies and foreclosures also hurt your credit score, as you can imagine. Now with bankruptcies, that can, depending upon how long it's been since that bankruptcy was discharged, It can also prevent you from getting a mortgage. Typically, 2 years from the date of that bankruptcy being discharged is how long you will need to wait until you can actually be approved for a mortgage. There are some special circumstances for particular loan types, such as the VA loan, where they will allow 1 year if you've been able to reestablish credit after a bankruptcy. But a lot of lenders will have a 2 year requirement. So you will have to wait 2 years after a bankruptcy in order to be able to apply for a mortgage and be approved. Having excessive credit is another thing that will hurt your credit score. So if you have 4 or 5 credit cards and then you have another 4 or 5 store cards because you go shopping at one store and it's, oh, get our store card because it'll save you 15% on this purchase, it'll save you 5% every time you use it on this purchase. That's excessive credit, because when we look at that as from a lending perspective, we see that there's a lot of people that you could potentially owe a lot of money to. If you have one credit card with a $5,000 limit, that's one thing. But if you have 5 credit cards with $5,000 limit, that's $25,000 that you could potentially get in trouble with. And so that's something that tends to raise, a red flag or a yellow flag with many lenders, is how much credit you have out there. And the next thing that hurts you is paying off installment loans and credit card and closing credit cards. So it's kind of a catch-22 with the paying off installment loans. Eventually, they are going to be paid off. And I mean, that's the purpose. Once you keep making those minimum payments, eventually the installment loan will be paid off. But when it is paid off, then all of that good payment history from that installment loan, let's say that it's a car payment, is no longer reporting on your credit report. So you will see your credit score drop once you pay your car off or once you pay off whatever other installment loan you have, because while it's on your credit report, that good payment history, and like you saw in the previous screen, 35% of your credit score is formulated by your payment history. While you have that open and you're paying on it, there is a 5 years, 10 years, however long you have that credit of payment history. But once you pay it off, that all goes away. And now it's not reporting good payment history on your report anymore. It's not reporting anything. So you typically do see a drop in your credit score once you pay off those installment loans. Having said that, should you pay off your car? Absolutely. When should you pay off your car is the more important question. And I say that depends, because if you have the money to pay off your car today and you're not looking to purchase a house for the next 6 months, go ahead and pay off the car, because that car payment that you'll no longer have is going to help your debt to income ratio when it comes to qualifying for a mortgage. However, if you're looking to purchase a home within the next year, or excuse me, within the next month or two, and you're like, oh, I'll pay off my car, talk to your loan officer first. And the reason I say that is because if you pay off that car, your credit score is going to drop. And if your credit score is on the fringe between the qualifying and not being able to qualify, or it's going to drop you into being able to having to spend more money to get the same interest rate or have to pay a higher interest rate, that's something that can affect your qualification. So you want to talk to your loan officer first if you're able to pay off your car, but you're thinking about maybe not paying it off, or maybe you should pay it off. It may be worth it to pay it off, especially if the dip in your credit score is not going to take you out of a qualification, but the increase that you'll get in that lower debt to income ratio will help you qualify for a bigger house. It may be worth it to pay it off, but if it's going to knock you out of contention of being able to qualify for a loan, maybe you want to leave that car on there right now. And closing credit cards. So a quick story with me, when I was getting started with my credit history, I got my first account with Bank of America, and I had a credit card with a $900 limit. And as I got a little bit older, I got into the military, served for 7 years in the military, ended up banking with a different bank, but I kept my credit card with Bank of America open, just never used it. And Bank of America contacted me and they were like, hey, we noticed you haven't used your card in a few years. If you don't use it, we're going to close it. And so they did exactly that, because I chose not to use it. I figured it would just stay open to help my credit. Well, it only helps your credit if it's open. Bank of America only wants you to use that card so that hopefully you can pay them interest along with whatever you're paying. And so when that credit card closed, it was a little drop in my credit score. However, all of my other credit lines were in very good standing, so I was able to bump that back up. But I mentioned that just to say, that when you close off credit cards, also it will decrease your credit score because that's a line of credit that you no longer have access to. So that's taken out of the algorithm that factors in your credit score as well. Moving on. So let's talk about credit repair companies before we get to the actual things that you should do to repair your credit. So I'm taking all of this information from, as you can see there, the Office of Attorney General of Georgia, the Consumer Protection Division. So that's the website below of where I pulled all this information from. It is from the georgia.gov website. So if anyone wants to go and read up a little bit more about it, they can. So you probably have seen, and everything in the red box is literally exact verbiage of what I pulled from the georgia.gov site. So you've probably seen ads with people promising to, be able to remove bankruptcies, liens, judgments, bad credit, and all of that stuff from your credit report. Here's what Georgia has to say about that. No one, in the highlighted part that I wanted you to focus on, no one can remove correct information from your credit report, even if it negatively reflects on you. It is illegal and a misdemeanor to operate a credit repair services company of this type under Georgia law. So there you have it, plain and clear, that it is illegal in Georgia. Most states across the country do allow credit repair companies to operate services such as these. Georgia does not like the predatory nature of what a lot of these credit repair companies have become or are currently today. And so Georgia has made it illegal for companies that are operating services such as these to operate in the state of Georgia. So who can you go to? You can go to lenders, banks that are insured by the FDIC, and nonprofit organizations can give you credit repair services or credit repair advice, credit repair advice. So lenders, banks insured by the FDIC, and nonprofit organizations can give you credit repair advice. And in some situations, a real estate broker, an attorney, or a registered financial advisor may also advise you. Advice is the key word here. This is a DIY model, do it yourself. So we, particularly me as a lender, I am going to inform people on what they can do to repair their credit, to help their credit. But it is me giving you consultation, me advising you, and then you're going to have to put in the work to go do it yourself. I'm not going to be acting on your behalf to reach out to debt collectors or anything like that. That's going to be the work that you're going to have to put in on your end. But again, lenders, banks insured by the FDIC, and nonprofit organizations can give you credit repair advice. So if you Google credit repair companies, a lot of times this is what you will come up with, but there are some credit repair companies in Georgia that still do try to fly under the radar or operate within Georgia, and some of them are nonprofit organizations as well. I won't get too much into the specifics of real estate brokerages and stuff like that, but as a real estate broker, you can offer credit consultation services under your real estate brokerage to your clients as well. That is something that is allowed as a real estate broker, and attorneys and financial advisors that are registered. So if you decide to respond to a credit repair offer, this is a list of stuff that you should be aware of. The one that I want you to focus on is at the bottom here. Advise you to dispute all information on your credit report. This is something you definitely want to be aware of, because this is the number one thing that I see so many credit repair companies doing that can get you in, I don't want to say in trouble, it can cause you more headache and more pain. And it doesn't help you at all. It's the biggest disservice that I see a lot of credit repair companies doing. And what they do is they offer their services, will help you repair your credit. And what they do is that they will dispute everything on your credit. All of your trade lines, from your active trade lines to all of your collections, they will dispute everything. And so clients will think temporarily, oh, the credit repair company's doing their job, because they will see a bump up in their credit score. The reason I call it a false positive, and the reason is because once you dispute an item on your credit report, it is temporarily removed from the algorithm that factors your credit score. So if I dispute an item on your credit report, that item is removed. And if it's a negative item that I'm removing from that algorithm that's factoring your credit score, well, then you see your credit score bump up because I've just taken a negative out of there. However, it's, like I said, a false positive because what happens is the credit bureaus reach out to the creditors and say, hey, such and such is disputing this item. Creditors reach back and say, nope, that's legit. And the credit bureaus are like, okay, it goes right back onto your credit report. So now your credit scores drop back down and there's a dispute listed under there now. So now you have your credit scores drop back down and you have a dispute listed under there now, which says disputed by consumer, resolved by creditor, consumer disagrees. And with that dispute, now when you go to apply for a loan, those disputes do not look positive on your credit score. And the reason is because if you're wanting to borrow money from me and I go and pull your credit and I see you've disputed everything on your credit, I'm like, okay, so there's a potential that I could loan you this money, and then a year or two later down the road, you're like, I don't owe you. I dispute all those charges that you're saying I owe you. So that's not a good look. And so much to the fact that in the mortgage side of things, when you dispute something, we can't approve you for a loan until that dispute is removed. And we have a process for that where we reach out to you and have you sign a document that states that all of these items that currently have disputes listed by them, you no longer are disputing them. You agree that the charges that are listed are accurate, and we take that signed document by you, we send that into the company that we use to pull our credit reports from, and we can get that dispute removed from that particular report. It's not going to be removed from your credit total, but from the report that we need in order to approve you for a loan. So we can't even approve you with all of these disputes on there. And lastly, you just don't want to dispute accurate information. That's an abuse of the process. A lot of people do it hoping that they can, get so I'll tell you this, when you dispute an item, the creditor that you owe has a certain number of days to respond to you. And if they don't respond to you within that certain number of days, then this item has to be removed from your credit report. And a lot of people play the game of hoping that they can, not get a response, or, they can get this thing removed from their credit report. That's an abuse of what the dispute is supposed to be used for. If you have a legitimate dispute, charges that you do not owe, the way that you use the dispute is that you send in the dispute. Again, that goes from the credit bureaus to whoever creditor that you owe. If they say that it's legit, it's going to stay there unless you provide documentation that you've already paid what they're saying you owe. And by that, you can send in payment receipts or whatever documentation you have for your payment history to show, hey, I don't owe this. Or you can dispute fraudulent claims. If someone has, fraudulently used your credit, you can dispute that as well and to say, hey, this was not, me that made this purchase. I've currently got this investigation going on. That's the appropriate way to use it. But you don't want to just dispute everything, especially if it's a legitimate credit item. And that's what most of these credit repair companies will do. And so just wanted to spend a little bit of time to let you know how the dispute process works. So moving along on how to repair your credit, you're hearing it again. Pay all your debts on time. Wow, it's like the third time I think that we've come across this, but it is the number one thing that you can do, and I can't stress it enough because everybody wants a trick or a secret or some magic sauce to improve your credit, and there is none. Just pay your debts on time. That's the best thing you can do because it's going to have the biggest impact on your credit score. Just paying your bills on time. After that, you want to pay past due amounts. And I did kind of try to put these in an order of importance. So definitely make sure all your bills are paid on time. And one last thing I will say about paying your bills on time is that you want to make sure that if you come into a hard situation where you can't afford to make a payment, reach out to your creditor in advance and let them know what the situation is. Hey, I just lost my job. I'm not able to make the minimum payment this month. A lot of times the creditors will work with you. Maybe they'll give you 1 month and take the payment that you owe this month and slide it to the back end of that loan. Maybe they'll give you a couple weeks or whatever and just double up on the next month. Whatever it is, reach out to them before you get to that missed payment, because once you have that missed or late payment, you still do have a little breathing room to get that paid. A lot of times the credit bureaus or the creditors won't report to the credit bureaus a missed or late payment until it's 30 days late. But before you even get to having missed that payment, reach out and be proactive. Reach out to them in advance and let them know what the situation is, what's going on. And a lot of times they will work with you. But secondly, you do want to pay the past due amounts so you can get caught up on any amounts that you have still outstanding. Pay down your credit cards that have been charged above the limit. Again, like we said earlier, that's because you're getting hit twice for those. So when you're repairing your credit, you want to get those down first below the limit. That's the first step that I would take when you're paying your stuff down, is to get those credit cards that are charged above the limit down. And then you want to pay all of your revolving debts down to 30% or less of the limit. 10% is better, because if you get them down to 10%, you'll see your credit scores jump up even more. But you will still see improvement when you get them down to 30% or less as well. So that's kind of the number you want to hit. I'll get into, lastly, becoming an authorized user. So this is one thing that is, I put it as an asterisk rather than as a standard line item with repairing your credit. And that's because if you are in a situation where I'm needing to purchase a home next month, in 2 months, I need my credit to jump up quicker than it's going to take for me to just pay stuff on time, because normally a lot of credit repair items, it will take about 6 months. Some of them take a year for you to start seeing improvement in your credit. But something that can happen much quicker, and by much quicker, I mean like 30 days to 40 days, is to become an authorized user. So what that is that if you have someone who has a credit card with a long history on it, and they keep the balance low, no missed payments, no late payments, then you ask that person, a family member or a really close friend, hey, can I become an authorized user on your credit card, because I need to get my credit score up so that I can purchase this home. They can add you as an authorized user. They contact the creditor. They'll need your social security number and everything so they can report it to your credit report as well. They can add you as an authorized user on that credit card. And what that does is it transfers all of their good pay history over to your credit. So if that card has been open for the last 8 years, never missed a payment, the balance stays low, then within a matter of 30 to 40 days, all of that pay history, 8 years worth with no missed payments and everything, transfers over to your credit, and you get the benefit of that, and you see your scores jump up much more quickly than you will with any of these other line items, which do take a little bit more time. So if you're needing that score to jump up a lot more quickly in a shorter period of time, that's the way that you can get that accomplished, is to become an authorized user on someone else's credit. So again, building credit does take time. Lastly, I did want to say, speak with your lender before opening new lines of credit. A lot of times I've talked with people that are like, oh, I need to build my credit, I'm gonna go get a credit card. Don't just run and go get a credit card right now. Let's see what your financial picture looks like before you just run out and grab a credit card. You might be better off to hold off, especially if you're looking to purchase within the next 3 months or 4 months, because as soon as you open up a new line of credit, they have to pull your credit for that. You're going to see your credit score drop. You're going to have new credit on there, which isn't helping your credit score yet, because you don't have a payment history for that new credit. It's going to take about a year for you to build up enough payment history for the credit bureaus to know how well you're doing with this new credit. So that new credit card that you're opening right now doesn't immediately start jumping your scores up the next month. You have to build up a payment history with it. So speak with your lender so that they can know kind of what the timeline is for being able to open up new lines of credit and everything, and if that's going to be something that's going to be beneficial for you, or if you need to hold off, especially if you're in the midst of getting ready to purchase a home right now. So that's what I wanted to put out. Again, a lot of information. I know I ran through a lot of it pretty quickly, but kind of on a time crunch, just because, Zoom gives me this time limit when you're on a free account. and you only got the 40 minutes. So, anyways, but I did want to put out some really good information for you all to hopefully just help you help someone else that you not might know that would be interested and could use information on credit repair.